So one, you want to talk to some local agents management companies that are used to bringing in some of those midterm stays. So if you're unfamiliar with any of them, then the best place to go is like a furnished finder, because it's harder for us to run the data for midterm stays on like an AirDNA. What's up, guys? Welcome to another episode of the Vacation Rental Revolution podcast. I'm your host, Shawn Moore, and we're here with a Whiskey Wednesday segment with my main man, Mr. Dave Savolich.
Hey, buddy.
How's it going, buddy?
Good.
We're ready to dive in today?
Yeah, let's do it.
So those of you that are new to listening to the Vacation Rental Revolution, welcome. Thank you. Appreciate you joining us. But these Whiskey Wednesday segments are short, sweet, to the point episodes. We talk about some things going on in our world sometimes, if we have anything going on. Mm-hmm. And we talk about some trending topics in the short-term rental world, as well as some questions that you guys send in. So if you have questions, make sure you send them in to the comments on whatever platform you're watching or listening on, or email them to support@vodyssey.com. We'll make sure that we add them to an upcoming episode. So Dave, you always have everything we're talking about.
Let's go.
What's on the agenda today?
First of all, we always have something going on, but we're not even going to get into that because it's just too
We're not
much.
even doing that today.
Too much. You know what I mean?
All right.
It's too much in our own world going on. We got so much going on that we don't want to take the whole time.
We're like really, we got a lot going on, guys. So we're not going to tell you any of it, by the way.
Back to school, kids.
You got weddings coming up. I mean, you got that. That's what's going on in your world.
Let's
right
talk
now.
about the fun stuff right now. The easier stuff.
All right.
Short-term rentals. All right. So the agenda today. So if everybody is kind of figuring what it looks like for the agenda on the Whiskey Wednesday, the first and foremost, talk a little bit about AI. So obviously that's a big topic that everybody's kind of talking about. Second is insurance costs. That's a big issue right now with people trying to find and getting the best insurance for their short-term rentals. And then we have a few good questions today. We didn't have them last time, and I kind of felt you were sad, and so I got to make sure we have some questions.
All right, good.
All right, let's talk about AI. So we had a member that actually posted on our school, which I thought was interesting, is, hey, they're looking for recommendations for AI platforms in the design area of their short-term rentals, and they found a pretty good online program that allowed the first 3 designs free. And then if you wanted to subscribe, they'd give you some more, ideas and thoughts. So, we use AI for a lot of things. Might want to consider AI to get some ideas on designing your property, designing your interior, some of that kind of stuff. What do you think? I think it's kind of cool.
Yeah, I think it could be really awesome. I think AI is really good for creative things. And so design is a very creative platform. I think that I haven't used it. I'm sure the tools out there, depending on the inputs, better inputs, and if it's able to accept better inputs, it can get better outputs. And so really, it'll be interesting. I think designing a house is different than designing a short-term rental. We talk about this a lot. Yeah. You're really trying to design the experience for a very specific target audience. And so if you're able to get that specific with some of these design tools on AI, I think they could be awesome. We see that AI does a really good job with creative type platforms, like writing ads, writing copy, going out and putting together even like profiles, like, on Instagram and doing different pictures and things like that. So would design be too far off from a lot of that stuff? No, probably not. Right. It's actually probably a pretty, because it's a creative tool, and being able to pull from different platforms, different elements of design, and putting it all together could be really cool. I'd love to see, I know that they were going to try it and show it. Did you see any designs?
No,
I didn't see any.
I thought it was interesting because, a lot of people, they don't feel very comfortable with the design side of things. And so I think more than anything, it probably just gives them some ideas, some things to think about. You know what I mean? If you're not that creative, I'm not that creative of a guy, but I would like to say, hey, if I used AI to just get some ideas and thoughts, whether I decide to use them or not, it might be a cool platform. I still think our designers in the Vodyssey program are amazing, and I don't think you'll replace a personal touch, but I think it can give you some ideas. So,
I don't think you're gonna. I don't think that's the intention of it. Probably though, you're probably getting kind of a storyboard. Yeah. Some ideas on a storyboard, and I think it's a great starting point, right? Yeah. It's an efficient starting point. You're not paying for a really expensive designer, and honestly, you can take a storyboard and a concept and an idea to a really good designer, and they can help you bring it to life. They can help you execute on it. They can actually go curate that design and figure out sourcing all those materials and actually putting it together and being able to do that. My guess is the design on the AI is going to start with that storyboard and help you with hey, listen, I've got this target audience. Here's the experience I'm trying to create. I've got this size of a home. Help me put together what the design of this home would look like is the way I would envision the AI would work. I haven't used it yet, but I think it could be a really good starting point. Like you said, for some of us aren't super creative, and we know we need to have this great experience, and it's a good starting point to say, hey, or what if you're trying to curate and decide between multiple designs? Like, what if you wanted to go with a mountain biking theme or a ski theme, or and then or completely different, and you went hiking,
Right.
and you're like, help me design and curate this experience based on these three different
Right.
things and see which one you like the best, right?
Yeah.
And so, I think it'd be really a really fun tool to kind of use. I'm not the AI guy by any stretch when it comes to AI advice, or being able to even say, hey, listen, this is what you should or shouldn't use it for. I've seen a lot of the products that AI have spit out,
Right.
and they've been really good, especially when you're talking about creative type products.
Yeah.
And so this a storyboard on design on home could be awesome.
Yeah, good. All right. Next up, let's talk about insurance. Insurance is, wow, it's one of those things where it's a challenge. It's a challenge right now in our world, not only in short-term rentals, but in just regular homes. And I've even heard horror stories from people saying, do not miss a payment. Do not let it lax because it's going to be hard to get it back. So just so everybody's out there, like, it's very serious. You got to take it serious. And we're always under the advice and impression to our members that, hey, it's never too early to start thinking about those things in the process. So start thinking about insurance, what it's going to cost, who's out there, who you can call, what are the opportunities, and deciding on where you want to, buy or build a short-term rental. Sometimes the insurance can be super challenging. So I found some information online, and typically short-term rental properties can be up to 2 to 4 times more than your home. Mm-hmm. So, I know in ours, we have amazing insurance. It is more, it is expensive, but it is amazing coverage. So I feel really confident in that. And some of the reasons in insurance policies, they treat them as a business. Mm-hmm. And so it's generating income. It's a business. So insurance companies charge more for businesses. They also charge more because there are people in and out of that property so often that the chances of issues occurring are more common than just in a home. So when you have a guest in there every weekend or every week and something's going on, something different, a party, an event, things happen. And so insurance companies charge more for that. And then there was 3 things they talked about. 1, property type. So if you're on the water, if you have a pool, if you are in a fire area, obviously that is more expensive. The second is the rental frequency. If you're renting out your property more, just like a business we talked about. And the third is the coverage options. Make sure it could be more expensive depending on the coverage you get. So if you're getting all the bells and whistles, it's obviously going to be more expensive than just the standard plan. So I don't know.
Yeah, it's one, I'm going to go down a couple different lanes with this one because insurance is a big deal right now. And it's a big deal for investors. It's a big deal for homeowners. When it comes to short-term rental investors, right, we are running a business. We've got people in and out of properties. We've got properties with a lot of amenities, lots of pools, hot tubs, paddle boards, bikes, e-bikes, all those different things that are at our property that people are using. It's more liability for the insurance company to cover, right? Mm-hmm. There's a lot more, there's things that could happen. People could fall off the bike, not even at your house, and sue you. And you want to make sure you've got a policy that covers that. And a lot of people don't think about that stuff, right? And there's a lot of things going on in our world right now in short-term rentals where we kind of take for granted that it doesn't really happen in a regular home. So these insurance companies, rightfully so, should be charging more for that. They're covering more. The other thing that a lot of these very specific short-term rental policy covers is loss of income, right? That gets expensive to cover. If you have something happen in the house and it's out of service and all of a sudden you were insured for $100,000 in revenue, well, you're paying for that insurance as well. So there's that 2 to 4 times is really realistic when it comes to, and sometimes it's more than that, and you hit on it based on area and property type, right? If you're in some of these higher risk areas that are on the water, they're in fire zones, and a lot of times our properties are in destination markets like that. They're higher risk areas to insure, period. And we've seen across the board, and a lot of legislation is trying to get passed where the insurance companies are saying, hey, listen, we've seen a flood of not short-term rentals. Let's take that off the board completely. And they're losing a lot more money because a lot of people are moving to higher risk areas, right? They're moving to more rural areas that are more susceptible to wildfires. They're moving to the beach areas that are, susceptible to hurricanes and some of those natural disasters and flooding and all that stuff. Well, the major population base was never really in those areas. They were kind of destination areas. We paid for it on the short-term rental side. Well, now insurance companies are covering a bigger part of their portfolio are in higher risk areas. Well, that's not a good, right? Insurance is a risk reward type of a thing, and they mitigate their risk, and they don't want to insure all these areas. So you're finding, like you said, if you lapse on an insurance policy or trying to get a new one, sometimes you can't even find it. It's hard to get depending on what type of a property, what the area is. And so those are things that we have to really consider. The other thing is that's a major line item on the expense line item now. When you're underwriting deals, a lot of people think of debt service. They think about all those, what your mortgage payment's going to be, all those things, and they worry so much about that. Well, I'll tell you what kills a lot of deals right now is the insurance cost. And it's because these insurance companies are saying, hey, listen, we've got to mitigate our risk. And so by all they're doing is raising rates in these higher risk areas. Well, we happen to invest in higher risk areas in the eyes of the insurance company because they're typically, beaches, mountains, deserts, these areas that might be more susceptible to natural disasters. And so whether it's wildfires, whether it's flooding, whether it's hurricanes, wind, all those different things. And so because of that, it can be a killer. And the thing that's hard is if you bought a property and you underwrote it 5 or 6 or 7 years ago, and you bought it at really good rates. So like a lot of the major things that we underwrite are fixed expenses with debt service and everything else. Well, that's not a fixed expense. It can go up, and we've seen HOAs skyrocket. We've seen insurance premiums skyrocket, and it takes properties from being really good investments to subpar or less than good and negative cash flow overnight because rates have skyrocketed. I saw that the number one increase, we all are feeling the pinch of inflation, right? And groceries have gone up 3 times. They've gone up 30%, or not 3 times. They've gone up 30% across the board, but it's 30% over the period of 4 years, 5 years, right? This 4-year period of inflation since post-COVID. And we're seeing all these other things. Well, the number one raise has been auto insurance. And auto insurance has gone up 21% this last year. Wow. That's huge. Yeah. It's a huge expense for people. And the legislation that's trying to get passed is these states that have, and it's like, well, why are more people getting in wrecks? No, there's not a lot more people getting in wrecks, but you've got a lot of major metropolitan areas that got soft on crime. When they get soft on crime, the criminals steal cars. They break into cars. Right. They all these different things. Insurance, so the insurance companies are paying all these claims in these areas that have quite a few people, right? And so they say, okay, we have to spread this cost around it to everybody. Well, if there's a whole bunch of crime and car thefts in Chicago, it's not fair for us in Utah that we have to cover that cost, right? And so they're actually trying to pass legislation that says insurance carriers aren't allowed to do that. They can do that now, right? But it would be nice if they don't, and then nobody's going to be able to insure in some of those areas that are soft on crime. Right. But the reality is, it's some of those things that we can control. There's other things we can't control. And in our world of short-term rentals, we can't control that that we like destinations that are higher risk, right? That's always going to be there. But insurance companies are having to play that game, and for a long time it was just second home vacation homeowners that were living in there, and so they didn't have this huge number of properties in their portfolio in high risk areas. They do now because there's been a flood of people out, moving to these destination areas because remote work and because we're able to do things online so much more. And people are moving to these destination markets as primary homes and primary residence. And so these insurance companies a lot of their portfolio is now in high risk. So they have to mitigate that. They do it by charging us a lot more in premiums. Something to really think about.
Yeah. It's just keep an eye on it. Make sure that you're super prepared. Be proactive. get several different quotes, make sure you're comfortable with the policy, make sure you're comfortable with the payment. And, that's just part of what we do. And
and you've got to seriously underwrite it. I always go, like, we love proper insurance. I think they're the gold standard when it comes to short-term rental specific insurance. Their commercial policy, the homeowner's policy, it replaces all of that stuff for you so that you've got that. I believe by far and away they're the most comprehensive coverage. They're expensive though, and there are going to be some areas that they just won't insure because it's too high of a risk. And so it's sometimes it's tough to get them.
Yeah. Okay. Let's jump into some questions.
Okay.
And this happened to us, so we have a little bit of an example on this. But I am considering using my short-term rental for a mid-term rental for a snowbird couple. How is the best way to price this 30 or 60-day stay? So they're currently using it as a short-term rental, but they have an opportunity to say, hey, snowbird's coming in. I want to rent it for 30 days or 60 days during the wintertime. How do you price that out?
Right. So one, you want to talk to some local agents, management companies that are used to bringing in some of those midterm stays. So if you're unfamiliar with any of them, then the best place to go is like a furnished finder, because it's harder for us to run the data for midterm stays on like an AirDNA, right? The normal way we would underwrite a short-term rental and use the data tools that we do for short-term rentals, it's a little bit more difficult on a midterm stay because it's going to be somewhere between that nightly rate for a short-term stay and the long-term rental rate that's unfurnished, right? So it's going to be cheaper nightly rate when they're coming in for 2, 3, 4 months at a time, but it's going to be more expensive because it's furnished than if they were renting it from you for a year. So it's hard, right? So Furnished Finder is a great tool. It's a resource. It's a marketplace for midterm rentals, and they've done a really good job. And go search your area for what other like properties are renting for. That's a really good spot to decide, okay, where am I going to be and how much should I charge? What
about your property manager? They might have some experience as well.
If they have experience in midterm rentals, absolutely. Like we had that experience in Florida on one of our properties, and this property manager, he understood the midterm stays and the short-term stays. He had a lot of clients that were snowbirds coming in, and so he knew exactly what that market did on the midterm stay side of life for furnished rentals, and so that's who we leaned on. And that's a great resource because they're right there. They're doing it. They understand what the rates are. They've got the client base that's coming in. If you're just trying to get a gauge for it, Furnished Finder is going to be a good resource because they're pretty much nationwide at this stage and pretty well represented in most markets where you're going to be able to find comparable properties that are renting on there that you can say, okay, based on the comps here and what the market is charging, this is probably where I'm going to be at.
Yeah. In our St. George property 2 years ago, we had a 30-night stay, and the guest pretty much just brought a number to the property manager and said, hey, would they be willing to do it for X amount?
Right.
And so we had to feel comfortable with that. And we kind of looked at, okay, we're probably foregoing, it wasn't a busy time for us, but we're probably foregoing at least 8 nights or so at a certain nightly rate versus the whole month. And so anyways, we did it that way. So, you can always negotiate too. And we worked it out, and it actually worked out good for us because it was a slow season for us. So,
and you never know, because like when deals are brought to you, like I've got a property right now that's got an insurance claim person in it. And we were going to do it as a short-term rental. We put it up. They couldn't find any furnished rentals. Their house burned down. And so they're rebuilding their house now. And their insurance company is paying me my short-term rental rate, my nightly rate on the short-term rental side of what we had it advertised for. And they didn't, and they're paying me that rate versus even a discount. Right. And so it was,
it was good. Yeah.
It's awesome. I mean, it's going to be my most profitable year on that property because of the way that happened. But if you're out there trying to think, okay, where do I need to be? And most likely you're going to be somewhere between your nightly rate on the short-term rental side and a long-term rental side, somewhere in between those numbers. And just go look at Furnished Finder, talk to a property manager if you're seriously considering it, and see if there's a market for it. There typically is. In most markets there is a market for it. You've got to decide if that makes more sense for you than short-term rentals.
Perfect. Okay. All right, last question. And we might be here all night, so we'll have to.
Because I get long-winded.
Well, no, is
that my warning?
There's a lot too. Well, yeah, that's the warning, but also there's a lot to this.
Okay.
But, so what are your thoughts on the tax law update to bonus depreciation? So in 2023, it was 80%. 2024, now it's 60%. 2025, they're suggesting it's going to be about 40%.
Yeah, and then 2026, it's down 20, and it phases out after.
Now that could also change, and with the new administration, and
Yeah, my thoughts are I'm a fan of those type of tax breaks. I think it's an incentive for investors to go buy properties. I think it's a really great tool if you understand it to accelerate and build your portfolio really quickly. And so we're a big fan of it. So we're sad to see it phase out. Currently, it's going to be gone in 2026. That doesn't mean depreciation's gone.
Right.
It just means bonus depreciation. It means you can't take it all up front, right, and all at once. And so keep that in mind. You can always still depreciate your properties. For us in our game, it's nice because we can, by materially participating, we can take that depreciation against active income for a lot of people in the short-term rental game. That's huge, and it allows them to build these portfolios a lot faster. So I'm sad to see it go. It came back up this year. We thought it was going to come back to 100%. It seemed like it had a lot of bipartisan support, and then all of a sudden it got killed. And so I think they're waiting to see basically who gets elected. And so, that's one of the things that is a big deal for me on one administration is probably going to keep it. One administration is going to let it go. And so I'm going to vote accordingly. I'm going to vote for the policies that I believe in and that are going to help me. And this is one that we have used, and we've used it to build wealth faster. And a lot of people have, so we're in support of it. But right now it's going to be gone 2026.
Yeah. Good.
Yeah.
That was awesome, dude. And that was
short. I kept
was
that
sharp and politically correct. And man, that was a good
if
answer.
I'm politically correct, then we're doing okay, because I'm usually not. All right.
Wow. So that's it today, buddy.
Okay. Awesome. We rolled through that one pretty good.
Yep.
So awesome, guys. Well, listen, we always appreciate you joining us. We try to keep these short, sweet, to the point. Hopefully you get some value out of it. Anybody else that likes the short-term rental game, wants to walk into the game with their eyes wide open, share the show. Those things help us. We don't run ads. We don't run sponsorships. And so the only way this show grows is if you guys share it. And if you have more than 30 seconds, like it, review it on whatever platform you're watching or listening on. And the most important thing I ask you at the end of every episode, you guys, pick that one thing you can do today. Start building that life you don't want to take a vacation from. Cheers, my friends. Cheers, brother.
Cheers.